Alright, okay folks, let's go ahead and start. Well, part of our sessions on trade the right way every day, understanding the process of trading. We are not here to give trading signals as such, but to understand the procedures of trading, understanding the different factors involving trading, the money management, the trade management, facts of the Forex market, trade plans, etc., etc., and of course some part of technicals also. Alright, what I wanted to do today was go ahead with the best times to trade the Forex market. Now this is a PDF which is part of our courses, so I've just put this down over here. I'll just briefly go through the PDF, but very important points which I'll cover, which I'll like to highlight over here. Well, let's start off with the very basics. Forex is the largest financial market in the world, which trades around almost 5 trillion a day. Now these are the figures from the Bank of International Settlements, which conveys Forex participants the volumes based on the information they gathered. It is a 24-hour market, so it trades from Monday to Friday, if you can call it EST. Let's talk about EST time today, because when we're going to be talking about trading, the times of tradings, we are going to be taking the New York time, the EST, as a base for everything. So it opens on 5 p.m. on Sunday EST and goes on till 4 p.m. EST on Friday. It's a unique market because it trades 24 hours in the world. Another fact which actually is not over here is that this turnover of 4.7 trillion exceeds the combined turnover of the London Stock Exchange, the New York Stock Exchange, the European Stock Exchange put together. So the volumes are huge, which is an advantage. Now, since it's a global market, somewhere around the world, a financial center is always open for business, and banks and institutions exchange currency. Now, for convenience sake, generally the Forex market can be divided, a lot of traders or everybody looks at it this way, into three main regions: the Australasia, Europe and North America. So these are the three regions. Now Australasia combines Australia, New Zealand, Singapore, Hong Kong, Dubai, Middle East, India for that matter. So Australia and Asia put together. Europe is entire Europe, part of taking into account UK, the United Kingdom, and the countries of Germany, France, Switzerland, etc., etc. North America takes into account generally the US, Canada as a whole, and parts of South America, since it generally comes into that time zone. Now within each of these there are major financial centers, right? Europe, for example, has centers like London, Paris, Frankfurt and Zurich. Now each Forex day, if you talk about a 24-hour cycle of a Forex, it starts with the opening of the Australasian market. As per the time zone, from east to west, moves to Europe and to America, moves to Asia, Europe, America. So as one region closes, another one opens or has already opened and continues to trade in the Forex market. Now, it is a dynamic market. The volumes are huge, a lot of price oscillations in a single minute. It allows the traders to enter the market many times in a day. But this 24-hour market does not necessarily mean continuous volatility. Now, this is one common misinformation, if you can call it, or the factors which a lot of new traders are not aware of, or which they assume, is that they think that this market can be traded anytime during the working hours of the week. While there is always a movement if you look at it, but ideally as a trader what I would require is volatility. I need movement of prices to catch a long or a short, or to look at technical analysis, so which may not be present all the time. Now if you want a good number of profitable trades, I'm talking about profitable trades, you are expecting profitable trades, you need to enter the market at the best time. That is when the activity, when the volume of the transactions is the highest. Right? Now let's just quickly go over some simple facts of Forex. It's a 24-hour market, as we said, and it starts from New Zealand, Australia, Asia, Europe and America. The US and UK account for more than 50% of the market transactions, and in the US specifically, nearly 2/3 of New York, when I talk about New York, we are talking about the US market as a whole. Most of the activity occurs in the morning hours when the European markets are open. Now, when we are considering the three major zones, so the New York zone, when we are talking about New York, we mean the entire American zone. So American subcontinent with Canada and parts of South America. So we call this as New York zone. We are talking in terms of EST, New York time, starts at 8 o'clock in the morning till 4 p.m. is the general time when you expect good volatility. In terms of EST, the European market starts at 2 a.m. in the morning. So if you are based in London, of course, due to the time difference, DST time, the market opens at about EST timings. Sorry, if you're in New York, it opens at about 2 o'clock in the morning till 12 noon. And the Asian market, of course, opens much earlier, so which is 8 p.m. in the evening, previous evening, if we can call it, till 4 o'clock in the morning. Now, looking at these time zones, we are going to be looking at the overlaps. Now, Forex trading activity is the best, if you can call it, heaviest or major volatility when the major markets overlap. So your currencies tend to be active when major markets overlap. So you have the US and the European overlap, which in terms of New York times, EST, it is from 8 to 12 noon. If you look at the timings above over here, the New York market opens at 8 o'clock. When it opens at 8 o'clock, the European market has already opened. See, it has opened at 2 o'clock in the morning. So from 8 o'clock till 12 noon, the European market is still open. So 8 to 12 noon is the time when you have two major zones trading at the same time. GAM, no, I don't think so. See, what is happening is Asia, definitely, if you look at it economic-wise, you can say that US economy is going down, the European economy, Europe is in a mess because of some countries and whatever. Asia, comparatively, they call it as the emerging markets, but Forex transactions will not, as far as I think, will not shift to Asia, because London and New York have been the center for Forex transactions, and they will always remain the same. Even if Asian countries like India, I'm from India, so Asian countries like India, China, you have Southeast Asian countries, the Southeast Asian tigers as they call them, they are emerging, Malaysia and Taiwan, and they are emerging economies. But currency-wise, the transactions will still take place in London and New York. And these market overlaps, I don't think will shift too much. Maybe slight prominence would go down and it would shift to some part of Asia, but if I would say today that London takes up about 30% of the transactions, maybe tomorrow it might take 25%, but that's about it. I don't think it's going to go more than that. Economies are different, stock markets are different, currencies is a global thing, and it will remain the same. All right, let's get back to this. So you have this 8 a.m. to 12 p.m. we are talking about EST, and the Europe and the Asian overlap is from 2 a.m. to 4 a.m. in the morning. Now, this is a chart which I have made of the overlap. In fact, let's get down to the charts. We have the time zones over here. Can you see the charts? Could you just confirm that? Can you see the charts here? Are the charts okay? All right. Now, this I have made a template out of the major timing zones over here. It's not very difficult, so you have these free indicators from MetaTrader, the trading zones. So you get these, and I've made a template out of it. Of course, the colors are a little mixed. I've chosen the wrong colors, I think. But let's just go ahead with this. The blue is the Asian timing. So from here, you can make out it's from 2 o'clock. This is based on the MetaTrader Alpari. MetaTrader Alpari is about GMT plus 2. So this may get a little confusing in terms of time zones. We are talking, when we looked at the PDF, we are talking about New York time zone. Here we're talking about GMT plus 2. But let's not talk about the time. Let's just talk about the zones. Let's look at the zones. The blue from here to here. Right, from here to here, this is the Asian zone. The green one, the large boxes, this green one is the European zone. London and European zone. So from here to here, part of the colors get mixed over here, of course, becomes blue. And this smaller box or large box is the New York zone. Now just notice something over here. When I'm talking about the overlap timings, the Asian and the European overlap, which is from 2 o'clock EST to 4 a.m. in the morning, it is this particular thing. But let me get my annotations over here so we just have a little bit of clarity. Okay, all right. Where is, give me my pen. Right, this one. I'm just trying to overlap this. The colors are a little, let me get this a darker color. Let me put this as a darker color. Sorry about that. Alright. This is one overlap that I'm talking about. Excuse the mouse, please. I'm sorry about it. So this overlap is one. The second is 8 a.m. to 12 noon New York time is this overlap. Right? My mouse is going somewhere else. Now, if you observe one thing, where do I clear all annotations? Look at these overlap zones and we'll just scroll back everywhere. You can definitely see that there is more volatility in these overlap periods over here. Right? This overlap and this overlap, definitely there's more volatility. Now in between, let's talk about in between overlaps. Let's talk about this particular time frame over here, which is the London zone, right from here to here. But in between the times, till the time the New York market opens and the London market is still in the afternoon stages, you can say that the volatility is slightly lower. New York post 12 noon, the volatility kind of dries up. This is the one that we are looking at, the yellow one that we are looking at. And this is one thing which I call as the no man's land. Post New York trading time till the time your Asian market opens. This one. Let me put this color, if you can see this particular color over here. Right, this I call as no man's land. You can definitely see that there is no volatility, no movement at all during this time. So as a trader, depending on what time zone you are in, if you're looking to trade post lunch New York, not even post, let's say post 5 p.m. EST till the next morning or till about 8 p.m. till the Asian market opens, if you are in New York, you will not get any volatility. Now, these are the facts which a trader really should be aware of, because you just can't get into the market at any time. Most of the traders think it's a 24-hour market. So, okay, come on, let's trade. The market is moving. No, it does not move. The no man's land, you will observe that there is no movement, and the overlap periods. Let's just go scroll behind on the overlap periods. Today in the overlap periods, today the Asian market had some decent movement. The overlap period between Asia and Europe was very volatile, up and down and up and down. There is still some good volatility. When New York opens, which is a couple of hours away right now from here, there will definitely be larger movement. And if you scroll back over here, you can definitely see the no man's land. You can see the volatility. Look at this. I mean, huge movements. Of course, this was news-based. This was the NFP last week. Of course, let's ignore the NFP. But besides the NFP, also you can see these large movements during the overlap periods. Just observe it. If you want this template, you can just send me an email. I'll give you the indicator and the template. And it's always handy to keep it on your charts. Just a quick reference to the currency that you're trading, that what time zone you're in, it gives you a good idea about what it is. All right, there's some good movements going on right now. Let's get back to our thing. So this was the major point of today's session, was you will get most movements, good volatility during the times of the overlap zones. Now let's just have a look at some other things. Now I'm just covered these in brief. As I said, this is part of our course and we go into much more details, but just to give you an idea. Now the major market zones, we looked at the major market zones as the Asia, Europe and USA. Let's talk about Asian zone. Let's call it the Tokyo trading session, but it takes into account Australia, New Zealand, Hong Kong, Singapore, India, Dubai. Everything comes under Tokyo trading session, right? It starts at 8 p.m. evening New York time till 4 o'clock in the morning. Now it is the first major market to open, and most of the institutional traders use the trade momentum as a benchmark to gauge the market dynamics. Now, trading in the Asian session, the Tokyo trading session, is not usually so great. It's usually thin. Most of the institutional traders, the hedge funds, investment banks, they look at the volatility to gauge the expected movements during the upcoming London session, and they use the Asian session to run stop levels, option barrier levels. Now, as what currency should be traded? Of course, the Asian currencies, Japanese yen, Australian dollar, New Zealand, and their crosses provide good opportunities, so you should get good, decent movements into that. But surprisingly, major activity and liquidity is concentrated on these two GBP based crosses, folks, the GBP JPY and the GBP CHF. These are very, very important. For some reason, we'll just go into it. Asian session, there is a lot of activity in these two. Of course, one is that it's a GBP is a JPY based pair, but the GBP CHF really doesn't have much work to do in the Asian session, but surprisingly there is a lot of movement during the Asian session. Right, there's good opportunity to trade these. In the Asian session, the European crosses, the Euro CHF, Euro GBP, Euro USD also to a large extent should be avoided, because this is, you really don't get any movement in this. Then comes the London trading session, which comprises the entire of Europe. It starts from 2 o'clock in the morning New York time till 12 noon. Now, London is the largest and the most important dealing center in the world. The market share of last, it was 30%, but the last BIS survey took this to about 37%. So London accounts for about 37% of the market volume. If you look at it, 580 billion, I think, is an old figure. If you look today at a 4 trillion, so 37-40% of 4 trillion is almost, what, about 1 trillion? So it's more than, the activities are huge. This is because most of the dealing desks of large banks are located in London, and the majority of currency transactions are completed during the London hours, due to the volatility of the market, the liquidity of the market. So this, it's a kind of a circle. You have all the activities there, and because the activities are there, you have the major funds, banks located there, which only add to the volume. And so this vast number of participants and high transaction volumes, reason being that London has high transaction volumes, it makes it a very, very volatile FX market. And for me, just as a piece of advice, folks, or something just as a practical tip, I prefer trading the London session more than the Asian session and the US session, and we'll get into it. One, of course, the Asian session trade is timing, or the activity is comparatively thinner. London session, of course, has a lot of activity, and so does the New York session, but the US session has certain disadvantages which the London session does not have. We'll get into that. Now, there is, of course, what currency should be traded during the European session? All the crosses of the British pound and the Europeans, so Euro and GBP crosses. You also have the currencies pairs, again, the GBP CHF, GBP JPY, along with the GBP USD, gives you good activities. USD based pairs, Euro of course, but the USD CHF being Switzerland, also gives you activity. The Canadian dollar also has a decent amount of movement, but of course the Canadian dollar has got much more movement in the US session. They exhibit volatility, but the volume of the yen pairs decline after the overlap period. So when we are talking about overlap period of 2 to 4 a.m. New York EST time, post 4 a.m. EST, the JPY based crosses and the pairs generally decrease in volatility. So London session is not very good to trade yen crosses, except again, of course, the GBP CHF, the GBP JPY being specifically one. Right? Then comes the US session. Now, it is the second most important market. Approximately 16%. Again, this has also gone up a little bit. The main point is that the New York trading is very liquid. And as I mentioned before, the majority of the deeds or the transactions or the currencies trades are executed between 8 to 12 noon, which is the overlap period when the European traders are still active. So you have traders in two major zones trading at the same time, which increases the volatility. Right after midday, after 12 noon, it becomes a little choppy as the liquidity dries up. Now, one of the basic disadvantages, if we can call it the drawbacks, I consider it as a drawback. Of course, there are a lot of people who tend to trade the news, but New York is influenced very heavily by the US equity markets, bond markets, the capital markets, and news. So if you have like first Friday of the month, you have the NFP coming out and the currencies go bloody volatile. Even otherwise, major news, you have the CPI, you have the GDPs of the countries, you have the interest rate announcements, which usually takes place during the US session, opening of the US session. Now, these may not affect the currencies directly, but all these affect the equity markets. And the equity markets are pretty strongly linked to the currency markets. So let's put it this way, the currency markets are pretty strongly linked. Now, for those of you who have attended the earlier sessions, I believe the recording is available at FX Street. Currency correlations, we had a session on currency correlations. We looked at the correlations between the currency markets and different markets. Now, if you remember, we specifically mentioned that the Dow Jones and the S&P influenced the currencies, specifically the yen pairs, to a very, very large extent. So what happens, I have seen this myself, that just let's say you have a technical setup. Now, I'm a technical trader and I have a technical setup. Let's say I'm trading a divergence and US open, something happens, and if I'm long on, let's say, the USD JPY, something happens to the Dow Jones, the USD JPY will go down regardless of the technical pattern that I'm trading. So you have to be very, very careful. This is one of the reasons why I prefer trading the London session, opening new positions or taking volumes or taking trades during the London sessions. New York session, yes, it has volatility, but you have to be a little more careful about it. All right. Okay, now what are the currencies which are traded? Of course, the USD based. Now, most of the currencies are USD based, so you get good volatility in a lot of currencies: USD CHF, GBP USD, Canadian dollar, Euro USD. Once again, the GBP CHF and GBP JPY momentum spills over from the London session, but again over here the European crosses, Euro GBP, Euro CHF, etc. should be avoided. So European crosses, bottom line, to be traded only during the London session. JPY crosses preferably to be traded only during the Asian session. So these are some of the points which a trader must be aware of. Right, so this is part. Now, there is another section which I won't go into it too much of detail, but know your currencies. You will have a definite edge if you are aware of the average pip range, the daily range of the currencies, the amplitude of the currency movements, the day and the time that the currency is expected to have volatility. Now, this is something which is part of our course. I have not put it down over here. Let's just have a look at the daily, average daily range. This may, of course, vary a little bit here and there. But when we are talking about average daily range, I'm talking about a 24-hour cycle. So, which starts from the Asian session, moves to the London session, through the New York session, at the close of New York session on a 24-hour cycle. A Euro USD pair is roughly moves about 111 pips on a 24-hour cycle. GBP USD moves about 156 pips. Concentrate on these two folks. The GBP JPY has maximum movement on a 24-hour cycle of 172 pips. GBP CHF has 161. That is because we've seen that these two pairs are active during all three of the major trading sessions. Now, for whatever reason it is, these movements, these pairs have got a lot of movement. Now, of course, this is not written in stone. Now, it may vary from here and there. And how do you use it to an advantage? Well, what I generally tend to do is, let's say that I'm trading in the New York session, and I know that the euro is expected to move about 110 pips during the day. And if I've seen that previously in the London session, the Euro USD has already completed about 80 pips there, it has been a volatile move for whatever reason. Maybe there was some interest rate announcement from the Eurozone, or could be some technical pattern, but if the euro has moved about 80 pips or so, then I am aware that there may not be a strong movement in the euro USD during the New York session, so I would tend to leave that currency aside. I would tend to concentrate on something else which I would expect more volatility. Now, of course, it may not work all the time. For all I know, after moving 80 pips in the London session, the euro will move another 80 pips in the New York session. This is something which you and I are not aware of, right? But the point is that as a trader, I need some edge in my favor. Now, if I need an edge over here, these are the factors that I generally look at, and I try to do it. It may work, it may not work. That's trading for you folks. Nothing works 100% of the time, but the probability that it may work, it is quite strong. So these average daily ranges are taken out from statistics, and they do work quite a bit, right? So that's about it. The conclusion is, of course, that transactions remain high when the two major markets overlap, and you should ideally, if you concentrate your trading during this 2 to 4 a.m. EST and 8 to 12 p.m. Let's say that you trade 2 hours here and 4 hours here, 6 hours every day. You would be at a good advantage because you're catching the movements when there is good volatility. The rest of the time, well, go play golf, go for a swim, sleep. Right? So you don't have to trade 24 hours a day. Alright, so that's about it, folks. That completes what it is. If you want this PDF, it will be put up on our London School of Financial Trading website. And of course, you can send me an email. I'll send you the PDF also. Not a very big problem. Any questions? Let's get back to the charts. Let's see what's going on. The London session today seems to be pretty volatile for the euro. Nice movements, good movements, going down and down. Euro has been, you can look at it even on the 15 minutes, it's just been on a downtrend. Alright folks, any questions? Anything else? Well, thank you. Alright, Susanna, thank you very much. Well, we'll end early because there's really nothing else. If you have any questions, of course, folks, feel free to let me know about it. Jeno, I don't look at trading signals over here, right? Yes, Mohan, just one moment. I'll just give you my email. There you go. Sunil at fibforex123.com. So send me an email. Jano, I generally don't look at trading signals. I'm more of a technical trader. If I find a technical setup, I trade it. That's about it. No, Gam. It doesn't stop. This is the advantage of having a 24-hour market. So there's no reason for it to stop. These sessions, they have just been bifurcated for convenience sake. It's, what kind of an analogy can I give you? It's like a border between two countries, right? There's just a fence post put over there, but the ground remains the same. Absolutely, there's no difference. So it's like the trading is continuing. It's just the session is distributed for convenience sake. So if an order is started somewhere, it will go through because it's a continuous market. Jano, let's put it this way. See, I trade. Let me show you a couple of trades that we are in right now. Right? GBP CHF, we are in a weekly divergence. This is where we took the buy on the GBP CHF well within our favor. We are looking for movements up to this one. It's on a daily basis, so yes, you should be, because even if you're a longer term trader, Boyke, is these movements during the intra-day will affect your trades in some way. Not much, George. See, the time zones for your broker, if he's using a different, every broker has got a different time zone. So the daily candles will vary, but not so much. It won't make too much of a difference. Like Alpari is GMT +2. I believe FX Pro is GMT at GMT time. No, it's FX GMT +3. So it depends. Generally, you wouldn't really look at one candlestick for a technical pattern. You would look at a lot of things, right? So as I was saying, technical traders, Jano, I look at setup. I saw a divergence over here. Let me show you one more thing that we are looking at currently. New York, 5 p.m. But Alpari, which Alpari GAM? Alpari UK, Alpari US? No. Alpari UK, Alpari US. Alpari UK is GMT plus 2. That's right. GAM, 1 minute. I'll just, Boyki, I'll give you. Let me just share this. Yeah, can you see the website? It's London School of Financial Trading. I'll put it up over here. There you go. That's London School of Financial Trading. Anyway, so we were looking at setups. I was talking to Jano. I'm sorry, Abraham. I was talking to Jano about it. Technical setups. I'm looking at currently to possibly go short on the USD JPY based on a harmonic pattern. Right? On the 1 hour, we have a perfect bearish Gartley. Just waiting for an entry, and it could probably go a long way further down. So this technical setup. Now this is what I do, what I trade on my accounts and other accounts. So I'm just telling you, I don't give trading signals. For the subscribers of my service, if I'm telling them I'm going short on the USD JPY, there is a reason. I tell them, okay, this is a bearish Gartley. This is where we are going to enter the trade. This is where the Gartley has confirmed. And based on the Gartley, this is also 1, 2, 3. For those of you who have earlier been through my sessions, you remember the Fibonacci's. And if you remember the Fib fans, this has stopped exactly at the 88.6 fan. So it is also a bearish 1, 2, 3 pattern. So it's a pretty decent setup for a short on the USD JPY, and let's see how it goes. We have not yet entered the trade. We don't jump into the trade because a formation is there. There are certain rules for it that we are going to enter only on the break of a certain level. But since you mentioned about do you have a weekly bias, I don't have a weekly bias. I don't have a daily bias. I look at the technical setups. If I find a technical setup on a currency, that's my bias for it. That's about it. All right, folks, for a pleasure once again being here with you. Have any questions, feel free to send me a mail at any given time. I'll always be there to answer it. And I will see you not next week, probably we generally have it fortnightly now, Thursday after that, for another interesting session on some practical tips on Forex. All right, folks, so have a good trading week, have a great weekend, and I'll see you all folks later on. Thank you very much for being over here.